So good afternoon, everyone, and welcome to our Market Insights session. So I'm Jim Micklethwaite, Head of Financial Markets for Thomas Murray, and we're going to change the program slightly today. We're going to provide you with a Middle East update, as we have been doing over the last few weeks. But we're also going to, in the second half, have a session on Mexico. So we're very pleased to welcome Roberto Gonzalez, who's CEO of post-trade for Bolsa Mexicana de Valores. And he's going to give us an update on developments in the Mexican market, being interviewed by our CRO and Director of Americas, Ana Giraldo. Okay. So just to start, in terms of where we are in the conflict after 6 weeks. So obviously the conflict is ongoing, and it's in a fairly critical and highly volatile state at the moment. We've got a 2-week ceasefire in force, which has been brokered by Pakistan and is currently in effect, set to expire on the 22nd of April. Despite the truce, the US military is enforcing a strict naval blockade of Iranian ports on the Strait of Hormuz, which has effectively halted all Iranian maritime trade. And obviously there are still difficulties in terms of other ships passing through the strait, so there are still continued disruption to transportation of oil, gas, and other associated products. President Trump has signaled that a second round of talks with Tehran could resume in the coming days. There does seem to be some backwards and forwards between Iran and the US in terms of how and when those will take place. And Pakistan and other regional mediators are trying really hard to get the ceasefire extended and obviously try and secure a permanent end to hostilities. While a truce exists between the US and Iran, Israel military operations in Lebanon against Hezbollah have intensified in the last week, with the death toll in Lebanon now well over 2,000 people. Prime Minister Netanyahu stated that Lebanon is not covered by the current US-Iran ceasefire agreement. Iran disagrees and has vowed to continue its actions against Israel in retaliation. So the situation is still very fragile. Lasting peace deal seems to hinge on how Iran's uranium enrichment capabilities and stockpiles would be conceded and managed. In terms of the economic impact then, the latest oil price, as you can see, is under $100 and seems to have stabilized around that kind of level now. And the markets are certainly, not panicking as much as they were in the first few weeks of the war. The IMF's World Economic Outlook update, which was published the day before yesterday, has basically now reevaluated the growth prospects for 26 and 27 across most major economies, as we can see in the center here. So their scenario is based on a scenario which is based on a short-lived conflict and a moderate 19% rise in energy prices overall for 2026. So obviously it's at 60% up at the moment. It would need to drop significantly for the rest of the year to hit that 19% assumption. But on that assumption, they predicted that global growth is projected to slow to 3.1% in 2026. Which is a downgrade from 3.4% in 2025, before a modest recovery to 3.2% in 2027. So the IMF's other scenarios are a bit more extreme. So they have an adverse scenario, which assumes further disruption, leading to higher energy prices and higher inflation expectations and tighter financial conditions for the rest of the year. And under this scenario, growth would fall to 2.5% globally, and inflation would rise to 5.4%. A prolonged war, and I think that's probably sort of, towards the end of the year, would trigger a severe scenario with growth dropping to 2% and inflation rising to 5.8%. So as we can see from the chart, I mean, the impact is, however, uneven, and different people are kind of winning and losing out of this. And I've done a kind of benchmark between the predictions from the IMF last year on all the economies and now the revised impact for this year. So advanced economies overall are projected to grow at 1.8% This is this figure in 2026. The UK is certainly one of the biggest losers out of the advanced economies, obviously excluding the Middle East, which is the major disruption. So their growth prospects have been slashed by 1.9% from the previous prediction. Asian economies with a high dependency on Middle Eastern energy have also been hit, and growth is slightly slower. But you can see that surprisingly, China and India are predicted to be reasonably resistant in the kind of overall scheme of things in terms of the impact. But across the board, sort of higher public debt levels are going to leave governments with very little room to maneuver. The IMF predicts a potential upside if the productivity gains through rollout of artificial intelligence materialize faster than expected. But they've also put a kind of risk downside on the reverse scenario as well, that artificial intelligence rollout constriction, particularly given higher energy costs and probably logistical disruptions, could actually make things worse. So it's a bit of a mixed bag from the IMF, but certainly it's probably not as catastrophic as we would have expected yet. Okay. So in terms of market impact, and most markets have stabilized since the first weeks of the war, there seems to be an element of headline fatigue, whereby traders have stopped reacting so sharply to major developments in the conflict. And most developed markets are feeling fairly optimistic about the probability of an extended ceasefire and a relatively quick conclusion to the war. So we can see that, for example, S&P now is pretty much at record levels. China has recovered relatively well. Korea has recovered relatively well, even as they are very dependent on Middle East oil. Yeah. In terms of volumes, so obviously there's been a huge amount of volatility in markets, and global equity volumes are up by about 24% in March compared to February, and certain groups are benefiting out of that. Obviously, exchanges and CSDs, market infrastructure, will benefit financially out of that increased volume, and certainly the major trading banks seem to be benefiting out of this as well. JPM reported first quarter profits up 12% from last year. Morgan Stanley profits up 30% from first quarter last year, and Citibank up 42% from first quarter last year. So obviously there are other factors to be considered in that kind of financial reporting figure, but they certainly seem to be benefiting out of the increased unpredictability and the volatility that's putting into the markets. So that's a kind of general overview of the markets and economic impact of where we stand after 6 weeks of the war. I'm going to pass over to Stacey Fernandez now. Stacey's going to give us an update from the banking and financial operations perspective, and heads up our Middle East desk. So Stacey, over to you.
Thanks, Jim. Good afternoon all, and thanks for joining the webinar. A quick update on the working of financial services in the Middle East. The capital markets in the Middle East remain open and are operating business as usual in the current scenario. The infrastructures in the UAE, Qatar, and Bahrain, who were working on a hybrid model, have all resumed operations from their offices post the Eid holidays. Now, let me quickly touch base on operations of the markets included in the presentation. The Lebanese capital market is operating as normal currently. The CST is operating on a hybrid working model, while the exchange staff are all working on site. The Egyptian capital market is operating business as usual, with trading and settlement activities proceeding as per standard schedules. Now, a couple weeks ago, the media reported the energy crisis faced by Egypt, and businesses were asked to close earlier than normal. In line with this, the Egyptian Prime Minister has designated Sunday as a remote working day. Now, this decision has been effectively implemented by both the CSDs and the market. Moving to Turkey, the preventive measures introduced by the central bank and the regulator in Turkey are still in place. Short sell transactions on the Bolsa Istanbul are suspended until the end of trading session on 24th of April. Moving to central bank operations, the Gulf central banks are closely monitoring the liquidity requirements and local banking operations. They all affirm that local banks are resilient, have sufficient capital and liquidity, and they stand ready to introduce further measures if required. In line with this, the Gulf central banks have issued preventive measures. Starting with Qatar, on the 29th of March, the Qatar Central Bank announced that it will offer an unlimited amount of Qatari Riyal repo facilities against eligible securities held by banks. And in addition to the current central bank overnight repo facility, a new repo facility with up to 3 months of maturity have been added. The reserve requirements for banks on deposits have been reduced from 4.5% to 3.5%. And for borrowers affected by the current geopolitical situation, the central bank has permitted banks to defer the loan principal and interest payments for up to a period of 3 months. Now, this is all in accordance with the bank's internal policies and their supervisory guidance. Moving to Kuwait, the Central Bank of Kuwait has adopted measures to enhance the flexibility of local banking operations. These include adjustments to liquidity standards applied to banks, which include liquidity coverage ratio, the net stable funding ratio, and the regulatory liquidity ratio. Similarly, in March, the Central Bank of UAE approved the Proactive Financial Institution Resilience Package, which is backed by the Central Bank of UAE's assets of up to 1 trillion UAE dirham. And early this week, the Central Bank of Bahrain launched a loan deferral and liquidity support program. So for a period of 6 months, the Central Bank of Bahrain will provide retail banks unlimited Bahraini dinar liquidity against eligible collateral. Currently, this was capped to Bahraini dinar 7 billion. In addition, the repo facility is extended to 3 months and the reserve requirements have been reduced from 5% to 3.5%. Retail banks and financing companies are allowed to offer customers the option to defer their loan payments and credit card payments, which includes principal and interest for up to 3 months. To summarize, the core financial services in the region, including trading and settlement, interbank clearing and FX windows, remain fully functional and continue uninterrupted. The local banks in the region are operational and have the capability to work remotely and on-site as required by the banks or the local authorities. Now, just to mention some of the developments announced in the region in the past week, the settlement cycle in Oman for transactions executed on the Muscat Stock Exchange will be shortened from T+3 to T+2 effective the 1st of September 2026. And then early this week, the Central Bank of UAE announced plans to establish a new CSD for national debt and sukuk. Now, despite the capital markets in the region operating business as normal, the current scenario is highly volatile, and it is a possibility that the situation can escalate without warning. As such, we have maintained the overall risk outlook and the operational risk outlook for Middle East CSDs and sub-custodian banks affected at On Watch. We are closely monitoring the developments and are in constant touch with the FMIs and the banks across the region to check on their well-being, their safety, and the market operations. News flashes will be released if there is any change in market situation or operations. That's all from me. Thank you very much for joining.
Thank you very much, Stacey. And before we move on, I'll just remind to everyone that if you do have questions, you can post them in the chat and we will pick them up at the end, whether that's on the Middle East update or indeed as we go into the interview with Roberto Gonzalez around Mexico. So now we're going to move to James Thorburn, who's our Director of Incident Response of our Cyber Intelligence Unit. And James is going to give us an update on the cyber situation in the region. James.
Thank you very much, Jim, and good afternoon, everybody. So just some updates since the last time that we spoke on the 17th of March. We covered Handala's early destructive operations and the hacktivist coalition that was forming, and concerns around previously compromised ICS systems. Since then, there are three main topics or three things that have changed significantly. Handala posted 23 victims in March alone, which is more than the group's entire prior history. And the FBI seized 4 of their domains and posted a $10 million reward. Handala rebuilt within just 24 hours and retaliated by breaching FBI Director Kash Patel's personal Gmail. These emails were independently verified, as well as the breach being confirmed by the FBI. The day before that, they published passport details, home addresses, and family information for 28 Lockheed Martin engineers in Israel working on the F-35 program, giving them a 48-hour ultimatum to leave. And they have since claimed attacks on UAE and Gulf infrastructure, though those remain at the moment unverified. We also have trends around state APTs, and potentially the most important development, where on the 7th of April, 6 US agencies, including Cyber Command, published an advisory confirming that Iranian APT groups had compromised Rockwell PLCs at US water, energy and government sites with confirmed operational disruption, and notably that vulnerability that was exploited cannot be fully patched at this time. Separately, Muddy Water was already inside a US bank, airport and defense supplier before the war started, deploying 3 new previously unseen backdoors. And Dragos identified a new IRGC OT group called Pyroxene that is currently mapping industrial control loops for targeted operations. And then the third real trend and change is the convergence in tactics and techniques. Checkpoint documented that Iranian state actors are now directly using criminal ransomware infrastructure. As an example, with Muddy Water operated as a Killing affiliate to hack an Israeli hospital. That attack was unfortunately initially misattributed to cybercrime. The practical consequence there is that criminal-looking activity in your network may well be state-directed. Al-Qaeda's cyber jihad movement joined the coalition, and the IRGC named 18 US tech companies as targets. The UAE is also reporting 600,000 cyber attacks per day, with 3 AWS data centers hit by drone strikes as well. And AI deepfakes and campaigns from this conflict have hit 145 million views already. If we move to the next slide, please, Jim. So I want to touch on some of the most significant active threat actors, and to note that this is not a single actor problem. We've got multiple Iranian APT groups operating simultaneously under different chains of command. So Handala, as we've touched on already, is very much the loud one, with destruction and psyops key parts of their operations, looking at attacks like the Patel breach, the Striker Wiper attack, and the claims around hitting Gulf infrastructure. Muddy Water is the quieter one and arguably more dangerous, pre-positioned inside US networks before hostilities began, and they have history of doing this before. In May 2025, they compromised Jerusalem CCTV, and a month later, Iran bombed the city using the intelligence gained from that targeting. Cyber Avengers is the IRGC's OT team, and they are behind the confirmed PLC compromise in the CISO advisory we discussed earlier, and that tradecraft has been shared with over 60 active groups as well. Pyroxene, the newly identified IRGC-backed group, specialize in IT to OT pivoting, and they have a tool in circulation that can force Siemens PLC controllers into stop mode, which can lead to significant disruption and impact. And 60-plus group coalition is shifting from DDoS attacks into active intrusion operations. Zed Pentest, as an example, have demonstrated actual ICS access, and the 313 team have been hitting Saudi and Kuwaiti government services in recent weeks. The key distinction here across these groups is the MOIS groups do espionage and destruction, and IRGC groups do OT and kinetic support, but they're both active with overlapping targets and different chains of command. So attributing what you might be seeing to a particular group becomes very much more difficult to do. If we take a moment to move on to recent operations in the next slide. Thank you. I won't read through every row, but I will pull out 3 highlights. The tempo has definitely increased. Between the 19th of March and the 13th of April, we saw domain seizures, the Patel breach, Lockheed doxing, the IRGC naming 18 tech company targets, the PLC compromises we discussed, and the Gulf infrastructure attack claims. The tempo is definitely not slowing down. The 7th of April advisory, this is one that you should take seriously and should be acted on. Confirmed Iranian APT compromise of US critical infrastructure and the operational disruption of potential financial loss. It's a key one to keep a track of. We do have the unverified claims against UAE and Gulf steel companies. It's definitely worth tracking. Handala, we know, do like to exaggerate. However, the confirmed operations that we've seen, Patel, Stryker, etc., prove that they have a high-end capability behind that propaganda. If we move now to the threat assessment, I'll call out 3 key changes from the previous threat assessment. So the United States has moved to critical, very much based on the confirmed PLC compromise that was documented and forced CISA to release an advisory. UAE has moved to critical, again citing the 600,000 attacks per day and the drone strikes that have hit 3 AWS data centers. Defense and aerospace moves up to critical, particularly with Muddy Waters confirmed pre-positioning in the supply chains that impact that sector. Healthcare and technology have been added at high based on documented targeting, and everything else holds, but the trend shows that the direction of travel is upward rather than stable. If we move to security advice on the next slide, please, Jim. Again, I'm not going to call out every single one. We can pull the slide up for you to read, but I will call out some of these that are different from last time we spoke. Number 1, assume compromise. With examples of Muddy Water already having access in US networks before hostilities began, if you have connections to defense, aerospace, or energy supply chains, it's not so much a question of whether you might be targeted. It's more that you probably already are being targeted because of those relationships. If we look at MDM hardening, the Stryker attack was unique in some senses because they used in-tune admin commands to wipe 200,000 devices. No malware was deployed. There wasn't an EDR alert. There wasn't a seam detection. They used legitimate tooling to be able to cause significant disruption. If you run Intune, Jamf, or any other similar MDM platform, look at enforcing multi-admin approval for any wipe commands or anything that could cause significant destructive activity, and adding phishing-resistant MFA on every admin account. If we look at again, at the CISO advisory around OT and iOS, ICS, it's not theoretical, unfortunately, so it does need to be acted on. If you have internet exposed PLCs, looking at Siemens or Rockwell, treat those as an immediate priority. The vulnerability in the Rockwell controllers, again, cannot be fully patched, and you need to look at a defense in-depth approach with proper controls that help to harden and protect those environments. And touching again on the criminal TTPs, the tools, tactics, and procedures, with Iranian state actors looking to deploy through criminal ransomware and infostealer infrastructure, if your SOC is seeing activity that you might have typically associated with killing or something similar, and it might not have been escalated to critical, you might want to change that position and take the stance that cybercrime could well be a state actor pre-positioning for a destructive operation. And to close out, really, Handala has explicitly stated that the cyber war will not end with any military ceasefire. The kinetic ceasefire, as we touched on earlier, took effect on the 8th of April, but cyber operations have actually intensified since then. So treat it as an active, sustained campaign and something that you very much need to keep an eye on. I'll hand over back to Jim now. Thank you.
Thank you, James. And that's suitably sort of technical and terrifying at the same time to say that things haven't stopped and they just continue in a different vein. So now we're going to finish in terms of the Middle East update. I'm going to stop sharing and we're going to go to Ana Giraldo and Roberto Gonzalez. And we will be beginning the interview with Roberto. So, Anna, can I pass over to you, please?
Thank you, of course. Hi, Roberto, and welcome. Thank you for joining us on our client webinar today. It's great to have the opportunity to talk to you about some of the initiatives at Indeval, which actually are getting a lot of attention. So, welcome. If we start, a couple of years ago, Indeval announced a replacement of its core system with a more modern infrastructure. And since then, we've seen partner announcements around CCP systems also. Can you take us back a little as to why you made that decision? In particular, why you decided to go with an external provider rather than developing your own system like you did for your current system, Dali?
Hola, Ana. Well, thank you for the invitation and for this webinar. It's been a long process. I think that just to provide a little bit of background, how we started is we needed to make changes in the technology because of the solution that we had was really efficient for fixed income, but not really good for all the global market. We saw a big change in how we conducted business, and well, in general terms, the solution that we had didn't work for what all the changes that we needed. Also, during COVID, we saw there was a lot of changes and updates and things moving on technology. And we also saw that there were other CSDs looking at enhancing and changing their infrastructure. And also, different to what we did 18 years ago, when there was no other options to really look at alternative or solutions from a third-party provider, and we had to develop one solution. We found that there were several, and we took a look at what was going on in Argentina, Chile, Colombia, also Canada, South Africa, and other places. So it was quite interesting, and we decided that while we made the analysis, it made much more sense to buy a solution from a third-party provider. We don't have the scale or a technology team that would allow us to really keep up with all the changes in technology in the coming years. So we decided to make an analysis and to partner, particularly with NASDAQ and some other CSDs in the region have done, and buy that solution and work with them and implement it moving forward. And we started the first on December 2023 with CSD and the CCP for equities, and what that was the initial idea. And also that the invitation was that we could have a partner that would help us to keep up with all the changes and challenges ahead with technology and new solutions. So that's basically why we decided to go to a third-party vendor, and also to have an open architecture so that we can have options to connect all the solutions if required.
Thank you. And where are you in that journey today? Can you walk us through the key milestones that you have reached so far and the key changes you are implementing?
Yes, it became, well, we started with those two with the intention to just change them and maybe do it on-premise as we have right now. Within the process, we found a lot of changes in the market. Also, AWS announced a big investment on a data center for cloud in Mexico, $5 billion. We work a lot with the regulators, and the program became much bigger and it's much more ambitious. So where we are right now, we decided to split it in three. One of them is derivatives. So we, in addition to CSD and CCP for equities, we are going to change trading, clearing, data, and surveillance for the derivatives, and everything goes to the cloud. That project started last 2024, and 2025 another piece. The intention is by year end should be able to finalize the solution and start testing with the market, ideally to be up and running next first quarter next year. And also we decided to go with the Calypso solution for the new offering on CCP and for bonds and repos. So the intention is to have that by first quarter next year and maybe test second quarter next year and be up and running. And last, also CSD, because of the size of the complexity, the idea is to have it by the end of next year and maybe implement it in 2028 with the equity CCP, and everything will go to the cloud. So it's a big change. We're basically taking all the legacy or keeping it out and moving to entirely new solutions and everything going to the cloud.
Indeed, a big change. So good luck with that. But I understand it's not just about replacing the systems. I think there are other elements as part of this project. Can you share with us exactly what other developments are you embarking on?
Well, it's a big change. It's not only technology. I think that the biggest challenge, and we have talked with a lot of people that's been through this type of transformations or evolution programs, and I think that the biggest challenge there is the teams, the people, generate collaboration, work with the people on innovation, and get together product operations, technology, and a good relationship with the partners to focus on the solution. So it's a big change on how we conduct business. It's not really technology, it's how we do business moving forward. So it's been a big change for the teams. How do we convince them to embrace change and not really resist all the change and just say, well, guys, let's keep doing as it is. The intention is to do it completely different.
And how do you see these changes benefiting not just Indeval, but also the broader Mexican market?
Well, certainly we will gain a lot of efficiencies, and that's clear. We have a lot of limitations in the system. Right now, our solution does not provide multi-currency solutions. No. One of the real benefits for the clients is, first, standards. We right now, if you go through Swift, we have a particular ISO messaging, but on the other solution, all the way to connect is a different one. So the intention is to move everything to ISO standards, also allow them to connect and get information to API. So different ways to communicate. So send us information, to gather information, to get data. And also we will give them full control of their operation. So they will be able to see the technology in the system, where are all the maybe 10 or 14 different currencies in securities that they trade through Indeval. They will be able to manage and move the cash or decide whatever directly from the solution on their systems, and also allow us to develop new products, services, reporting data. We see a lot of benefits, particularly in data, and also allowing us to provide some of this processing for them. So I think it's a big change. It's a great opportunity for the market to also automate and gain benefit from this technology also on their side.
Okay, thank you. We've seen in other markets that these large-scale infrastructure projects are very complex to deliver. They usually go either over time or over costs. What are you doing to ensure that you remain on budget and you don't go over time?
Yeah, that's a big challenge. One of the situations with this is certainly the project started with CSD, CCP. Now it's much more than that. One of the challenges have been staffing, getting the proper staff, so we be able to focus on whatever we need to do. And one of the things that we're trying to keep on track, besides the follow-up and the intensity how we work with NASDAQ and other providers or vendors, is the intention is to keep the solution as much as possible to global standards. So to give you an idea, we saw other CSDs that made maybe 300 changes or change requests to the package solution that Nasdaq provides. Other made 150 or so. We are in the 40s. So the intention and the challenge to the team is, if we do something as we do it right now, why cannot we move and keep the process as it is in the solution that is according to global standards? So we are very, very strict on any change request that is in theory needed or discussed with the vendor. So right now, I think we're quite on track, but certainly there are a lot of different elements that we need to consider. And we do follow costs on a monthly basis, very, very interesting. But it's always a challenge, and certainly, yes, what you mentioned is critical. We saw Australia and we saw other countries that went through really difficult times on this type of projects.
Yeah, Australia is a well-known case, so I hope it goes smoothly for you. Any other challenges that you can mention as part of this project?
I think that also working with providers in different cultures, everything is in English. So there was also a chance for part of the team, but working with teams that are in different places, different time zones, and try to be objective and also focus on collaboration with them is very, very relevant, critical, not easy. So I think that the biggest challenge has been how to work together, technology, operations, and product with each of the different vendors and teams of the vendors, because it's the solution, but also connectivity, but also the cloud, which is really new for us. We don't have any critical solution on cloud today. So we will start with this was on derivatives. So we need to fully understand the organization, to fully understand how does cloud work and what are all the benefits that we will be able to get from that. And it's a totally different world. So people and working collaboration, I think, are the biggest challenges that we're facing. Getting there.
That is obviously one big challenge. And I guess another dimension is the regulatory dimension. How closely have you been working with the regulators in Mexico? And any particular considerations or challenges when it comes to approvals? For instance, you just mentioned the cloud. Have there been any issues to get all of this undergoing?
Regulators are always a challenge in any country, but we've been working with them since day one. One particular thing with Banco de Mexico, the central bank, is they are, besides a regulator, they are also in the board of Indeval. It's quite usual, but Oton, the payment system head, is in our board, and we work very, very close with them. Cloud was not a possibility maybe 5 years ago. There was no way that we could go there. So I think that AWS and Nasdaq helped us a lot to fully understand the benefits of the cloud, convince them that it was the best for the infrastructure to move to the cloud. And also with the Mexican Securities and Exchange Commission, they have a full department for technology and all these things. Also, banks in Mexico have been working, moving things to the cloud, so that helped. But yes, regulators are fully aware and since day one, and they're very supportive for the process. So that's great. And that was one of the particular challenges that we wanted to have them on our side and not stay in front of us.
Thank you. And now looking a bit further ahead, with technology evolving so quickly, are there any other areas like artificial intelligence that you are looking to explore or are already exploring?
There are a lot of things going on, and that's also one of the challenges that we have. We've seen everybody announced and enact that one of the main topics was tokenization. So that's new technology, new solutions, business. What is the case, the business case? How could this affect the Mexican market? Also, trading 24/7. We just saw yesterday Nasdaq announced 24/5. They got approval. So that's another challenge. We need to take a look. We certainly want to develop the retail, and we're looking at technologies to how to get to the retail market in different ways, partnering with the brokers. And AI, as you mentioned, is a big changer. We saw also the impact on the software companies and also the pricing and the valuation of these new companies. So all the solution, all the changes that we see. as you know, we started with you, with Thomas Moray on this orbit diligence on what we call My Indeval, providing information to clients and also allowing them to ask and question through this tool of AI so that they can get better and more information, and also that we can answer better and more consistent and provide better information to all the questionnaires that we get from rating agencies, clients, etc. But there's a lot of things that we need to look at AI, not only for automation, but also to provide and develop new services. So a lot of things, and certainly with that cyber, and I just saw the report and the presentation, it's always a big issue, and we need to look at technology and how to protect ourselves through this threat. So a lot of things going on, and how to partner with these global players such as you and, well, certainly NASDAQ, AWS, and the rest.
Thank you, Roberto. That has been very insightful, and good luck with all your projects. We're coming to the end, but we have a couple of questions from the audience. Maybe we can go through them quickly. One is about regulatory focus on operational resilience. So the question is, how does this new infrastructure of Indeval improve recovery capabilities and reduce systemic risk compared to your legacy system?
That was the cloud and the new solution. I think one of the main drivers of the main benefits, besides the services, solutions, and reporting capabilities, is how we can recover. So right now, the plan that we have with AWS, that we will be able to work in this zone in 2 different data centers. So the resilience that we'll be able to get, it should take less than 3 minutes or so to switch from one center to the other. That everything is within Mexico, in Querétaro, and that will be really, really efficient. And the plan is to have everything related to post-trade, to have those 2 options that we will be able to switch quite quickly. And also, if there's anything relevant that basically inhibits the entire region in Mexico to work, we will be able to switch and move maybe in less than an hour to another region in the US. So I think that resilience is one of the most critical elements in which we will gain. And particularly, if you consider what Indeval does for the market, we're processing about $600 billion on a daily basis for the market. That's critical that we're able to provide services nonstop each day that we should. So resilience is critical, and that's a great benefit for us.
Absolutely. I think you mentioned a few years ago that every 3 days you settle the GDP, the Mexican GDP, basically, right? So obviously at that scale, it's very important. Resilience becomes very important. And the last question from the audience, Roberto, it's the following. System renewals on this scale are significant investments, as we discussed earlier. How do you balance passing on costs to participants versus demonstrating tangible efficiency gains or new revenue opportunities?
That's one of the questions from the banks and brokers associations when we announce and say, well, will this cost us more? And well, our plan right now is not to increase fees, which this is one decision we took from the beginning. The other one is we will have a lot of benefits, efficiencies on our side, and we also see a lot of benefits and efficiencies from our client side. I think that it's a great opportunity to change how the market works. This is by far the largest investment that Indeval and the group has done in infrastructure and technology. And the intention is to take advantage of it. And that would allow also our participants, banks, brokers, pension funds that are growing big time, mutual fund companies, also to enhance their solutions and connect to different ways and explode that. And we will be able to provide a lot of things. So the intention is we will not increase fees. One. Second, yes, we will develop additional products and solutions. And we believe that we have started discussing with them several efficiencies that could be done on their side that will be able also to them to reduce costs and gain more profit.
Well, I'm sure people will be very happy with that response. Hopefully fees will not increase and you can actually achieve some savings. that's all from us. Thank you very much, Roberto, for your time, and thank you everyone for joining. We'll update you on any other developments soon.